Hi, I'm Louis McGraw.
Hi, Ken Martello from RPM Platinum Capital.
Beth Brooks.
And today we're going to talk about what does it take to qualify, who can qualify, and some of the things that it takes to get into a property, whether it be a single-family home or 1 to 4 units.
Well, it's definitely changed over the last couple of years, as you know. Before we would hand the client a mirror, and if he fogged up the mirror, you got a loan. It's a little different these days, guys. You like that one? I use that one in my seminars, so if you guys come to my seminar, you're going to hear that one.
Look for the mirror? No.
Yeah. So the biggest difference is that we're going to look through your documentation, look at the income, and make sure that you can actually afford the property. I realistically think as long as you're meeting the minimum standards, 640 FICO score, and you got some income, got a job, you're going to be able to qualify for something in most cases.
Okay, now with the job, let me interrupt you there.
Okay.
With the job, how long does someone have to be currently employed or in that industry to qualify? Because like some people, with the market changing the way it is, let's just say someone was working in the aerospace industry.
Okay.
And then they were laid off, they had, say, not a long gap in employment, but let's just say they're now working in the movie industry. Okay, but they've had income or a solid income or verification of income for the last, let's just say 5 years to keep it short. What are some of the dynamics that would take place in putting a loan like that together?
Well, that one's not too difficult actually. So the industry doesn't really matter too much. It's the job history that we're looking at. So you mentioned a layoff, and that's very common unfortunately these days. If there's a layoff and a job gap of over a month, you're typically going to have to be on the job for 6 months if it's a different industry or different company. Now, if you went back to the same company, we could just go off that day's income, actually, just one paycheck. I actually had a client who was buying in April. He was a construction guy. He got laid off probably about 3 or 4 days before the funding of the loan. So unfortunately, we had to cancel the loan because he no longer had the job.
But he could still fog the mirror.
He can still fog the mirror, but it doesn't count these days. So actually, they're going into escrow. Well, actually, about 2 or 3 days ago, they went into escrow. He got rehired by the job, and all we needed was one paycheck and a verification from his company saying that he's back to work.
So all was not lost. That's good.
Do you have any other examples of people in today's current market with everything we're hearing about? Is there anyone who's come to you, a particular client that comes to mind, who didn't think they would qualify or could buy a home, and you were actually able to make it happen?
Yeah, definitely. This is actually a pretty fun one for us. My partner has a cleaning lady, who's now my cleaning lady, who's actually like 4 or 5 more of our friends' cleaning lady, and this happened in the last couple of months. So she was talking to my partner, and she said, "What do you do for a living?" Because she overheard her on the phone talking about numbers and real estate conversation. That's all mortgage and real estate people talk about is real estate. So she said, "I'm a mortgage banker." So this client said, "Really, I would love to buy a house, but I don't think I'm able to." Now this is a housekeeper, mind you, who works a lot of cash, first generation American, not a lot in savings. So we said, let's look at the numbers, let's look at your taxes, let's look at your bank account, see what happens. So probably 2 weeks later, she's in escrow. She qualified in income, she qualified on assets, she had her 3.5% down. So within 2 weeks, she actually went out, found a property, found a duplex, mind you. So not only is she moving her family into a brand new house, she has rental income off that.
So she's not only cleaning up your house, she's cleaning up on real estate.
Yeah, it's actually a pretty cool story.
Yeah, my first property that I purchased, when my wife and I purchased, was actually a duplex, and we used that. The qualifying ratio for us changed because we were able to use part of that rental income. So explain to me in today's terms, what part of that ratio, so let's just say I wanted to buy a property of 1 to 4 units, which qualifies the same as a single family application-wise, how much of that rental income could actually be used to help me qualify for that property? Because that's the scenario, that's exactly how we got started in real estate and started building our portfolio.
And I think it's a great way to start and actually even finish. I have clients that are in a big house and they go buy a duplex or a fourplex to get that rental income. Typically, you're going to be able to count anywhere from 75% to 85% of that rental income. So if you have $1,000, we're going to give you credit for $850. We figure at some point you might have a vacancy, you might have to put money into the property, maybe you have a tenant who's slow on paying rent. So we're not going to give you the full credit, but 85% is a lot and will affect your qualifying.
Absolutely, absolutely. And that's a great way to get started, you know. As I've gone through the real estate industry, I've come across some great people, you two included, and just some of the mentors that they've shown me over the years, and it's not a mistake, it's just a lesson. You have to look at it as a lesson and build upon that and say, what can I do in the future to make things better? Some people are going through some really, really tough times across this country right now. And, you know, we're talking about buying a home, and some people are just trying to keep the same home that they have. They're trying to, you know, they want a refi or they want a loan mod. And I know your expertise is what it is, but what if someone were to come to you and they are, say, behind in their mortgage payments? Where could you tell them to find or to pool together money, or how would you help them restructure, or is there anything that you could help them do with saving that property that they're in?
Well, probably the first thing that they need to do is they need to contact the lender.
Okay.
And a lot of times that's actually the last thing the person does, because they're embarrassed, they're afraid that they're going to get reprimanded because they're not making the payment.
Okay.
You know, you're calling the bank, and the person on the other line, it's not like you owe him personal money, so he's not going to be
Really
upset.
good point, yeah.
He's not going to be upset at you. Hopefully, depending on the bank, you know, each bank is going to be a little different on how they work with someone that's behind on the mortgage. Are they able to modify the mortgage to make the payment a little more reasonable? Right. And realistically, it's the bank that's going to say yes or no, not like a big modification company. It's the bank. It's going to look at your individual situation and try to help you out as best as possible.
Okay, so now I'm sorry, go ahead. So let's just say this person has gone through this turn of events in life, okay, which is unfortunate, but it is the current market condition. How long and what advice can you give this person? Because I've heard people, you know, people have called my office and said, Louis, you know, I want to buy a house, but, you know, we've just gone through, we're in a short sale, we just filed for bankruptcy, or how long does it take for these negative remarks or negative marks on their credit report to be satisfied for you to down the road qualify them? So how far back do you look for, say, late credit card payments to say, okay, well, you're caught up on everything else, you've got a couple late credit cards, now how can we get you qualified for another property? Because you now have another job, your employer's, you know, you're back on track again, you've gone from part-time to full-time. What are you looking for in those instances to help someone get back into a property?
So with the late pays, it really depends on what type of late pay it is.
Okay.
Is it a credit card or is it a mortgage?
Okay.
With the mortgage, is it just one late payment, or is it actually you've gone into you short sold the property or got foreclosed on?
Okay.
So those are some bigger issues.
Right.
You know, as far as the credit cards go, typically it doesn't matter. If you have a late payment here or there on the credit cards, or even a string of late payments, the bank is going to look at that. They're going to ask, why did you have a late payment? We write a letter of explanation. I lost my job. Things were really tight. Now, that being said, the credit score is probably going to be a little lower. So we have to still have that minimum credit score in order to move forward.
Okay.
Now, in regards to short sales and foreclosures, these rules are constantly changing.
Right.
They've probably changed 3-4 times in the last year alone.
Oh, I thought you were going to say since we started shooting this video.
I wouldn't be surprised. My partner was looking at a loan the other day. The couple went through a short sale. It was actually the husband, and the wife wanted to buy just in her name. And she did one of these deals at the beginning of the year. It was totally fine, totally within the guidelines. And we looked at that and we had to say, unfortunately, you have to wait because the guidelines have changed since the beginning of the year.
Gotcha.
So typically right now on short sales and foreclosures on FHA, you're looking at about 3 years.
Okay, all right, very good.
Now, we talked about earlier, there was the cleaning woman who thought she had no chance of buying a home, and you were able to get into it. What about people, have you run across anyone who's pretty sure they've got all their I's dotted, T's crossed, and then something trips them up that they just didn't anticipate? Are there any scenarios
definitely.
like that?
So
Okay.
one of the biggest issues or complaints I get is I don't want to run my credit in the beginning of the process. And I think there's a lot of misconception about running credit, especially when you're looking for an auto loan or a home loan. They basically, the credit bureaus being they, basically group all those inquiries into one inquiry, and it's not really going to affect your credit. You're going to have more effect on your credit by using your credit card, and that that bill is going to show up on your statement, more so than a mortgage inquiry. So I had one couple who they made a high six-figure income, close to seven-figure income, was looking for a $2 million property, was going to put a lot of cash down. Basically, you would think this couple would have the pick of the litter, very easy, just stamp it approved, and they're on their way. So they were hesitant about pulling the credit. We looked at the credit, and lo and behold, they had mortgage slates. And she said, that's impossible. We have it on automatic withdrawal. They've been taking our money out every month. We haven't missed a payment. I said, okay, well, it's very clear that you have 2 mortgage slates. Why don't you call the bank and find out what's happening? What happened in this case was they had their impounds, which was taxes and insurance included in the mortgage. Their taxes went up by $50 for the year.
Oh.
So what is that? That's a couple bucks a month that it actually affected their payment. So their automatic payment was based on the lower tax amount. So they were actually paying it, but it was what's called a rolling 30 because they were $4, $5 short on their payment. So unless we were able to look at the credit up front, they would have never known because in their eyes they were making the payments. Now we were able to fix the problem, but it actually took about 3 months to fix this problem. And you would think it would be a simple phone call. It was a lot more involved with that. But you know, these folks, $2 million house, $1 million in income, and they still had issues.
Right. Now, would you know, throughout the mortgage industry, we've all heard of the rapid rescore. Would that have worked in this case to fix that and then do a rapid rescore on them, or was it just something completely outside of that scope?
Well, luckily that we had enough time, and this is why we do our due diligence at the beginning of the process, which was a lot different than the fogging up the mirror that we talked about. We do our due diligence, so when we get into escrow, we could just submit the loan, and we don't have to run around and fix these issues.
Very good.
So we had enough time to fix it, but if a rapid rescore is when there's a derogatory or something wrong on the credit that's inaccurate, we get a letter from the creditor saying what's on the credit report is inaccurate. We submit it to the company that we pull credit from, they submit it to the bureaus, they update their records, and then we pull a new score. Typically about a 5 to 7 day process.
Okay.
So if we had the letter and we needed to, we could have done the
Very
rapid
good.
rescore.
Very good. Well, Ken?
It sounds like just with everything else that you've enlightened us on is that the biggest thing consumers need to be aware of is that education is everything, and picking a team like Ken and his team who bat 1,000 here, to get that education, to go in prepared and to know everything up front so you're not caught up, so that you can continue moving forward in the process and score big in the real estate market.
Absolutely. Well, once again, we appreciate your time. If you would go ahead and give us your contact information so that everyone will know how to reach you.
Definitely, Ken Martello at RPM. My website is learntobuyahome.com, and it's the number 2, so learntobuyahome.com. And my direct line is 310-465-2326.
Very good. Thank you very much.
Thank you, guys.
Absolutely.
Pleasure.
Thanks, Beth.